Hello and welcome to Car Dealer Live. My name is James Batchelor, and in this video we're going to be taking our monthly look at the used car market. Joining me as always is CAP HPI's Director of Valuations, Derren Martin. Hello Derren.
Hi James.
Always good to have you on, Derren. Now just before we take a look at what's happened during the month, Derren, can we just talk briefly about the cost of living crisis? Because of course with what's been going on with changing of prime ministers, the economy is in sharp focus at the moment. We hear that consumer demand is being dented when it comes to cars. Various surveys this month have said the current economic pressures are affecting people's car purchasing decisions. There must be a price crash for used cars on the way, surely.
I could give a politician's answer and sort of skirt around it, but I'm just going to come out and say no. We really don't think there is a cost of living. The cost of living is going to affect prices dramatically. Prices are already high because of what's happened previously, but in times of recession and tough times, people still go out and buy used cars. And the main reason that there won't be a crash, in our opinion, is just there's not enough volume out there to cause it. So even if demand dropped off a cliff, there's still, we're still seeing used car volumes around 20% lower than they were pre-COVID. There's 2 million less registrations over the last 3 years now. So there's just less cars that are in the market. So it's all about supply and demand. If demand drops, it probably won't drop to any degree on supply. That's not to say that values aren't going to come down. We think values will come down, but crash, certainly not.
Yeah. And as we've seen at various points this year, but there's been hopes that the new car market is going to improve, production is going to improve. There's been the odd pocket of improvement, but generally speaking, we've seen the latest S&T new car production figures in the UK, it's down by 6%. In Europe, it's down as well. So the longer this goes on where new cars aren't flooding into the UK market, it's going to prop up used car prices, isn't it?
Yeah, and there's various issues that get thrown at you throughout the year. This time last year, no one thought, well, a war in Ukraine and obviously terrible events that are happening there, but nobody thought that the logistics side of things would be affected by that, or that there were wiring harness issues with that. There's zero COVID policies in the Far East. That means factories just shut down for periods of time, and that stops parts being produced and then sent over. So there's lots of things that just keep on happening. And then obviously the events recently in the UK alone with the economy and policies being reversed and that type of thing, it's really, really difficult to forecast what's going to happen. But when you look at that supply levels, I can't see new car supply getting back to normal for a long time. And September was up on last September, but still not anywhere near pre-COVID times. So there's still less cars being registered and built.
Yeah. Okay, then, well, let's look at October then. Of course, in September, there was a small rise, which was a bit of a surprise, I think, from a few people in the industry. What did October deliver?
October, so the headline figure is a 0.5% decrease at that 3-year point, and that's mirrored across most of the age points as well, actually, especially on younger ages, around 0.4, 0.5%. So that's actually quite strong for October. We've not been massively used to values dropping because of what happened last year, but that sort of 0.5% drop is what we've seen various months throughout the summer, and it's a bit of a continuation of that. So it's, yeah, as I say, it's the strongest October that we've witnessed since sort of 2007, 2008 time. So it's it's been reasonable. It's been quite mixed for retailers, but the trade side of it, the wholesale side, has performed pretty well. And within that, there's obviously lots of moving parts, but we've worked really hard to move values around and reflect what's happening in the market. But at the end of the day, the figure is a very small movement down.
Yeah. So, it's interesting you say that's probably the strongest October for 13, 14 years or so. But, with there being a small increase last month, and a relatively modest drop this in October, would you say it's difficult to sort of predict what's going on, because there's a small rise and then it drops again, and it's sort of, it hasn't leveled out, but it's kind of constant, isn't it?
Yeah, it's been like that most of the year. We had a couple of months in sort of March, April time when we had drops of around 2% each month, which again isn't massive, but those do stand out as months where it started to weaken. And then I think everyone realised that the supply levels just weren't there, so those drops couldn't continue. To predict what comes next, it is quite difficult. We've been expecting values to drop by more. You just look at the headlines, look at the cost of living crisis, and prices are high. But the counterbalance of that is supply levels being low. So we think values will drop in the next couple of months as we go into Christmas. They always do at this time of year. Consumers start to focus on Christmas, and that's where the money goes. Maybe put off a car until the new year. But I can't see values dropping off a cliff. I really can't. I think they'll probably be stronger than we've predicted previously this year for those 2 months. I think that they'll drop, but not by as much as we thought.
Yeah, yeah. I mean, do you think prices could actually sort of drop into sort of like 3 to 4%, something like that, a little bit more of a chunky drop, as opposed to the sort of the 0 point something percentages that we've been seeing during the year?
They might do, but maybe over the two months, or maybe over a 3-month period, they might go like that. But at the moment, there's not really any signs of it. Maybe a small drop off this week, but not really. And you've got to really look at it to think, is that anything large happening? And it's not really. It's still very, very stable. Retailers are still doing okay. Demand has dropped off a little bit, but not anywhere near enough to cause a concern. If there were a lot of cars out there, if supply levels were normal, there probably would be some issues with pricing. But because the supply levels aren't that high, then there isn't.
So, were there any particular car sectors which have sort of performed better than usual, sort of price categories?
Yeah, look at price categories. The lower end is sort of doing okay again. The movement at 10 years is negligible, so that's probably the strongest age point. We hear of cars under sort of £12,000 being sort of a sweet spot. Fleet cars that have come back into the market that are a bit more expensive, they've struggled a little bit more. Once you get over that sort of £20,000 mark, again, that's probably more of a struggle. And cheaper cars, city cars have been the strongest sector this month. Consumers potentially getting rid of a car, buying a city car, maybe it's their second car or something like that. We hear of people trading in 2 cars and getting a smaller car because they don't need them. And obviously dealers are prepared to stock city cars as well, because they're lower value. They can stock a couple of those for a larger SUV, and they know they'll sell them quicker. So that's a little bit of strength there. Diesel has done okay this month. Diesel's actually the strongest fuel type this month. They've dropped in value this year more than other fuel types. So maybe there's a bit of a story there that diesel's on its way back on price. And obviously there's less of them in the market, and you can't get them many of them as a new one now. The focus is on alternative fuels. So yeah, diesel's performed well as well. So I think that cheaper price point, fuel isn't necessarily important there so much. You're prepared to pay for a car, and if it's a diesel vehicle, then fine.
Yeah, because I mean, it's been reported about a lot lately how diesel prices have gone up, and the gap between petrol and diesel is at some retailers it's sort of 30p a litre more. So it must be because there's fewer diesels in the market, and they sort of become a little bit more scarce.
Yeah, and still, if you're doing plenty of miles, diesel actually still really works for you as well. But you have to kind of do the maths on the fuel type there. But yeah, it's they've been surprised us again a little bit that diesel is doing well. But yeah, it's a lot. There used to be parity on new car registrations. It's now 10% of the market, so it's a lot smaller.
So in general, we know that there isn't a crash on the way, but with high energy prices, that must surely be having an effect on EVs, electric cars.
Yeah, so EVs have come down this month on overall by 1.3%. So that's about £500 at the 3-year point. So that is relatively significant. You have to look at energy prices. I think dealers are being risk averse with what they stock. We hear of aspirational purchases being sort of put on hold for consumers as well, and EVs do come under that category. Maybe there's a bit of a comfort blanket around going for a petrol or diesel car, not quite prepared to pay high prices for EVs. So we have seen them come down, and also there's plenty of them around. So there used to be, I think a year ago, they were around 2% of the sold data that we received. They're now about 8% of the sold data that we receive. So there's plenty of them about. We've seen some drops on some Tesla products, Model 3, Model Y have come down for a couple of months on the trot now, and fairly significant drops for a Model 3 in particular. But they are still priced quite high. So we've still got some examples of Model Ys where we value the trade price above the new car retail price. So it's probably not surprising that as more of them come back into the market, they are going to drop in value. But it's not just Teslas. There's other vehicles as well. There's other EVs that have dropped in price this month because just they're just not particularly desirable to stock, and the consumers being a little bit risk averse with them. So i3, Q4, Audi Q4 e-tron, they've come down. Even Nissan Leaf has come down a little bit. So maybe those increases are now reversing.
Yeah, so I think possibly, I mean, would you say the advice to dealers there is, if you know you've got customers in mind for EVs, perhaps don't stock them?
Yeah, I think buy them if it's a sold order. If you know, you can sell. Probably Nissan Leaf is one that is probably less of a risk, but those expensive vehicles, sort of EVs are expensive. So if you're looking at sort of 40, 50K to stock them, and you're not quite sure, especially this time of year, then probably it's potentially a little bit of a risk. And certainly a theme from the dealers we've spoken to is that they're not stocking up massively on anything at the moment. They are replacing sold vehicles. They're stocking up to a degree, but they're not stocking up for January like they were last year. So there's a little bit of a concern. Obviously, we don't know where the economy is going to go. So but it's probably not going to be good news for a little while. So they've just been a little bit risk averse there.
Yeah. Well, that's an interesting trend we'll look at in the months to come. But I know you said it's difficult to sort of predict, but what are your feelings for the next month or so in the market?
I think values will continue to drop. I think demand will drop, and I think that because of that, values will come down, but not to the same degree as we probably predicted a little while ago. So I think values will drop maybe 2 or 3% over the next couple of months, maximum, probably not more than that.
Yeah, fantastic. Always a pleasure to chat to you, Derren. Thanks for joining us today.
My pleasure. Thank you.
Well, that's it for today's Car Dealer Live. Join us again very soon. Bye-bye.